Hi, everyone. Happy Friday. This is Dana with Dana Ortiz Homes in Remax. I want to welcome you to my video series that focuses on the local real estate market and mortgage information. For those of you that don't know me already, I am a local Orange County realtor, a 30-year resident in Mission Viejo, where I've had the pleasure of raising my children. I'm licensed for 15 years and associated with RE/MAX for the last 8 years. I specialize in residential listings, purchases, property management, and rental properties. I work with investors as well as individual homeowners, first-time home buyers. I have additional experience with 1031 tax-deferred exchanges, REOs, short sales, and also with senior communities. Today, I am here with one of my referral partners, a smart woman, very sharp lady with years of experience in the mortgage banking industry, Brigitte Archer of Oxford Capital. Hi, Brigitte. How are you?
Hey, everybody. How are you, Dana?
Good, thank you. Good. Happy Friday to you.
Not really.
Thanks for being here today. Everybody, I absolutely love working with Brigitte because we share a very similar customer service oriented, proactive approach to doing business. I can always count on her to get the job done for my clients. And even when we run into sometimes those little snags in escrow, I always know that she knows how to help us navigate through that. And ultimately, I can count on her to get our escrows closed. Today's topic is going to be about buying a home during COVID-19. What's it like out there? You know, loans and qualifying process during this pandemic that we've all been living under and are excited to kind of get the economy moving. But before we get started, I wanted to just have Brigitte give us a little intro and a little bit so you get to know who she is. Get it, Brig.
Okay. Well, to begin with, Dana, I love working with you as well. You know, as we move on in our lives, we become more in touch with our values and the things that matter, our core values. And we tend to attract people, I think, that are similar. And so I see all of the strong qualities in you that you've been kind enough to say that I have. My background, I started in banking and financial analysis and moved into mortgage brokering and early 80s. And then in 88, I formed my own company, Oxford Capital. So it's been more than 30 years, and my business is entirely based upon referrals and referral partners. That's it. And I'm grateful for that. So a lot of years in the business. And then 6 years ago, I aligned myself with the largest mortgage brokerage in the country because it affords me the opportunity to have access to nearly every lender, every program, and really the most competitive rates. There are things going on in the market right now where some lenders are in and some lenders are out, and being affiliated with C2 instead of being one office, one company has really allowed me to help my clients much better. I do love what I do, and I hope to continue to do it for many years.
Yeah, well, and I can attest to that because you certainly have come through for my clients. So, and I know for your other clients as well. Well, today's topic, again, buying a home during COVID. First things I want to point out is homes are selling. Absolutely, they are. There are homes coming on the market. Escrows are closing even throughout this whole thing since, you know, late February, March, and April. For example, in the month of April alone, from the 1st to the 30th, in all of Orange County, there were a little over 1,700 homes that sold, closed escrow, okay? And in my area of Mission Viejo alone, there were 83 homes that sold just in the month of April. And, you know, so again, I think, again, with today's lower interest rates, you know, it is absolutely still a good time to buy here in Orange County, in Southern California. Some of the questions, I wanted to get into asking you a few questions, you know, about the process, qualifying, getting loans, what's it like, you know, pointing out some things. If, you know, obviously we know things have changed. Obviously, you know, there's been modifications all around. First off, you know, basically, what is it like qualifying for a loan under COVID environment? I mean, is it more critical now than ever to pre-qualify? Are there any little stumbling blocks or changes that you've seen, you know, out there?
Yeah, it's always been really critical, in my view, to pre-qualify, because mortgage programs are rather a changing, constantly dynamic process, and investors and the names of all that constantly changes.
Yeah.
So during COVID, I would say there's three main things that have changed.
Okay.
Obviously, employment is an issue in this country, and unemployment rates are at a high. The buyers of these mortgage-backed securities and the Fed do not want to buy loans that turn around and end up in a deferment or forbearance because of a lack of employment. So what's happened is that the verification of employment process has become extremely detailed,
Okay.
and it goes all the way up until sometimes minutes before the loan closes. People who have been furloughed or are working part-time now compared to before may not qualify. They won't qualify if they've been furloughed, if they're collecting unemployment, and so forth. That seems obvious, but I still get those phone calls.
Sure.
Yeah, the other thing that's changed is, credit guidelines are a bit more strict. The loan programs that were out there for people who didn't have great credit and more of a creative side of doing things, or didn't have verifiable income, they don't exist right now. They will be back.
Okay.
The other thing that's occurred is investment property rates are higher than they usually are, because the theory is that if a person loses their job, they're going to take care of the home they live in before they take care of a rental.
Sure.
And quite frankly, if they've got renters that are on forbearance and not paying full rent, it's kind of a risky area. So they
Right.
price rates for the risk.
Right.
And and cash out refis are still 1% higher in rate than regular loans. Once again, the Fed and the investors do not want to do loans for people who are pulling cash out so that they can survive through the pandemic.
Right.
So there's lots of nuances, and I'll just pat myself on the back by saying, being approved with so many lenders around the country with so many programs, it's really been a help to figure out solutions for certain people.
Excellent, excellent. So what are the loan options for people out there that, let's say, do at least get over that employment, hurdle of conventional FHA, VA, do they have, are those types of loans still readily available, or have you seen, a little bit tightening or restrictions on getting those loans?
Yeah, there have been. So conventional and FHA and VA are still out there. We still have 3% down programs for first-time buyers that are not FHA, which comes in handy when you're buying a condo. But what's gone, completely gone, are jumbos. And jumbos are loans that are over 700, and I should know this by heart, 765,000. And there are no more loans over 510,000 at the moment, FHA. The high balances, FHA is not doing them. Okay. And VA is doing the lower, but they're still really pricey. They're higher than normal. And VA is not doing any high balance up to 765.
Oh.
So some programs have disappeared. And as I said earlier, the programs for people that need something, a workaround type of a loan, they don't exist right now either.
Okay.
So normal loans exist unless they're jumbos. And on the government loans, you should check first on the pricing.
There may be some new limits. Well, and that was one of my next questions were regarding the loan amounts, which you've kind of touched on. But again, limitations. So obviously staying under the jumbo loan mark of the 765 is where it's at. But even still, there's going to be some limitations on, I would imagine, the, like you said, the FHA loans as far as the maximum amount, but also, are they changing the down payment requirements at all? In other words, is even for conventional, are they really only wanting 20% down, or can you still get away with less?
Usually the less amount down, sometimes the slightly higher rate. But really, that's not the case. I mean, we still have 5%, 10%, 3%, all of that. We still have 15-year loans, and I'm doing some 10-year refis for some clients, and trying to get ready for their retirement. Everything really is out there, but the pricing adjustments on the rates are slightly different on different programs. I know that I have the lowest PMI rates in the nation because of the lender that we work with on that, and they haven't gone up. And I know you realize, but maybe our viewers don't realize that PMI is a mortgage insurance that generally insures mortgages that exceed 80% of the value of the property. And those rates are still low, and they are insuring. So far, so good. I was on a conference call this morning, Dana, and I heard in the conference call that some of these things are going to start going away next month. I also learned that if the curve bottoms out, or I don't know, people get back to work according to the call I was on, they're going to start bringing all these programs back.
Yeah. Okay.
And at killer rates.
Yeah. I'm glad you pointed out, because for some people that may not be aware, PMI does stand for private mortgage insurance. And now you did mention, which, and I'm just questioning because, again, some people watching may not be aware, when you say the loan gets more costly, can you explain what that would mean to the consumer, the home buyer? Interest rates go up, points on the loan,
A lot of loan programs that they kind of don't want to do them. So the lenders are adding a huge margin of profit. Like, you guys know what points are. Most people like to do no point loans. Some of these loan programs are like a high balance VA. You can't even get the loan for less than 2 or 3 points, which can be thousands, tens of thousands of dollars. So their margins are like crazy right now, and it's temporary. I do know that. But yeah, now conventional loans, you asked me about rates this last week. I have a client that I locked in at 2.875 on a purchase, 20% down. Yeah. And then they went up, and then the next client I locked at 3.5. But still, those rates are great.
Yeah. Yeah. And, exactly that. I obviously was going to kind of ask you kind of how the rates were going right now. But with that, the locking of your rates, again, we touched on this, I think, in a previous video, but it is important not to gamble right now. If you've got a good rate, the monthly payment is good, everything works, lock it in when you can and not hold out and try to gamble hoping that it's going to go down, because obviously everything is changing from day to day here, under the circumstances. I forgot to mention, or ask you, I should say, when we were talking about the qualifying though for loans, is we touched on the down payments, the loan options, but the FICO scores. On any of these types of loans, conventional, FHA, VA, have they changed the FICO score requirements and the debt to income ratios? Have they changed a lot, or any?
Some programs now have minimum FICO score requirements, but not much has changed in that respect. The other thing that really hasn't changed much are the minimum down payment requirements. All of that really remains the same.
Okay. And are they still allowing gifting of funds from a family member for?
Yes.
Okay.
Absolutely.
That's good. So employment verification, we definitely touched on that. That is critical at this point. It is really very important, that you are employed, that it's verifiable up till the end of escrow. So appraisals, we may have spoken this in another video, but again, appraisals, they are doing more drive-by appraisals, getting pictures of the home from either the agents or the homeowners, so that appraisals are still happening. You're not seeing like a 3-week delay just to get an appraisal. The time that it takes to close escrow, have you seen any drastic change or longer time periods during this?
Oh my gosh, it's all over the board for me. Again, doing this, but I have a lender, they're the number 1 wholesale lender in the country with a special relationship, and with them, I can close purchases in 21 days.
Okay.
I say 30.
Oh, yeah.
Now, I have other lenders that have certain programs that my clients need that, because different lenders have different things, and they're 60 days, and some are 45 days. They're just inundated, and they cannot keep up with the volume.
Yeah.
So I would like to tell you that it's important when you're going to a lender or a broker, it's really a good idea to find out what their average closing days are. Yeah. Usually big banks, and I really do enjoy putting them down, I'm sorry, without naming them. But sometimes giving them a loan is like putting it in a black hole between clerks and clerks and clerks, and then you really don't know what's happening. So I don't know if that's the case right now, but that's typically the case when things get busy.
Yeah. Oh, sure. Well, and that actually brings us to my other question is, if a home buyer, whether you're new or not, but really, what are the top 3, to 5 questions that a buyer should really ask when interviewing a lender such as yourself, before they make a decision to work with them?
Yeah.
What in this environment, because there is some uncertainty about closing or delays, what would be some of your top questions you would suggest a buyer ask?
Okay, so if you're going to a big bank, you're only going to be able to get whatever programs they have on their menu, and that's it. If you go to a non-banker, the first question I would ask is, are you a broker or are you a direct lender? If it's a broker, which I am, it means they have access to more than just one set of programs. Again, if they say they're a direct lender, but they're not a bank, it means they're directly affiliated with maybe 1 to 3 lenders, and that's all they have. Okay. So it's nice to know really what kind of lender you're dealing with. That's question 1. Question 2 would be, after you get interest rates, get them in writing so you can see the total fees involved. It's very confusing. Sometimes you have options on those fees, and they can be negotiated. Usually the higher the rate, the lower the fees. But get it in writing on a fees worksheet or a loan estimate. Okay. And I think the third thing to ask is, can they guarantee that rate with an advanced rate lock? Okay. That would be the other. Now, besides all that, Dana, I would say, do what we always do. We're all spies now on the internet. Check them out, see if they've got good reviews. Customer service really is important. And as consumers, everyone's really concerned about rate, and they shouldn't have to compromise service. So really, it's those 2 things that are most important. And I hate to say it, but for the consumer, it's rate first. They want service, but it's rate first. And for me, it's both. Yeah. Absolutely.
Yeah. And again, I can't stress enough, you also have to feel comfortable with the person that you're working with. So, having that relationship, these are one of the most important, largest purchases of, most people's lives. And, so it's critical that you have a good feel for the person communication wise. You can communicate comfortably, the patience in explaining things if somebody doesn't understand something. But absolutely. So you want to know, and the ability for that lender to close. In this environment, you really got to make sure that they have the ability to close, that something isn't going to happen somewhere down the line.
Okay, that brings to mind one more thing that's a very, very big deal. Don't give your loans to telemarketers over the phone. Call centers, I should say. Telemarketers and call centers. If you, there's 2 things that happen a lot. The call centers, I won't mention any of those companies, but again, you're dealing with very, very less professional, maybe, clerks, and they don't always perform. They don't always have the service levels, and they don't always quote correctly. This can happen anyway, but I find that more common when you're dealing with call centers. And if you get things in the mail that are too good to be true, we all know the golden rule. If it is too good to be true, it's probably too good to be true.
Yeah.
Yeah.
Well, and that can very well be. And again, people have had a variety of different experiences. So once again, you gotta ask some right questions. Even if they seem a little awkward, it's better to ask them up front before you make your final decision in who ultimately you want to work with. And again, a lot of us do deal with referrals. I refer you clients, you refer me, you have past clients that refer you, and so on and so forth. So again, people know friends, they have, I've worked with this person. Even on a referral, it's still a good thing to sit down, have an intro conversation, communicate, make sure you guys connect in some way and get your questions answered, and you feel comfortable moving forward. So all right, so again, we've hit on, I think, some key areas that are really important for a home buyer. Number 1, yes, the market is moving, homes are selling, and buyer demand is there. Number 2, you want to pre-qualify with a lender that you've established and spoken with, answer some questions, get feel comfortable with, know that they're going to perform for you. you know, loan options, you still got options out there. Loan amounts may slightly have been affected as far as the amounts of loans, but again, that still leaves a pretty large amount of value there in homes to still purchase. Your FICO scores, everything, you know, it's kind of like, it's all relative. Depending upon what you need, what you can afford, you know, it's fitting into those molds, you know, of what will work out. Appraisals are still happening, escrows are still opening and closing, notaries are still, you know, things are still getting signed. So all that's on a really positive note that it's, again, even during the, you know, COVID-19, our market is still hot. It's still working. The gears, I should say, are still, you know, are still turning. I wanted to point out just quickly, one of the most noticeable changes, I think, under COVID for a home buyer is really going to be in how they're viewing homes and actually seeing houses and properties. People were always looking at online first, you know, all the different, you know, online platforms for properties. But now, more than ever, listing agents, we have to prepare beautiful virtual tour videos. We're now hosting virtual open houses. You can't necessarily go to the property for an open house. So all of the online what do you call it, image of the property is critically important. So home buyers, just be prepared that you're going to absolutely be doing more online with meetings such as this with your agent instead of in person. Meetings with escrow, meetings with your lenders will be done virtually. There's protocols that are in place now when we visit properties for wearing masks, cleaning, sanitizing before and after. There's new disclosures that are out there now for us to have to sign before showing a property. So I think that that's the more obvious or the more visible changes under COVID, maybe not as much with the actual lending part. You know, there are some changes, but maybe not as visible or as noticeable. So again, I always, to, you know, err on the side of caution, allow a little bit of extra time for everything. Now where we could have shown a property in 15 or 20 minutes, now it could be taking us 35, 40 minutes, an hour, you know, because of these extra protocols. So just allow some extra time. Everybody have patience with everybody, you know, because we're trying to be safe for everyone's sake. And even with the transaction itself and the lending process, always, again, err on the side of caution. Unless you absolutely need to close like super fast, you know, give yourself some room just in case something happens that might cause a delay. You know, because we are working so virtually now for everything, paperwork, things of that nature. So anyway, well, this was another great discussion. Thank you, Brigitte, so much. I always love chatting with you, and I so appreciate your time and your advice. Everybody, if you have any questions, maybe something we didn't cover, or if you'd like Brigitte's contact info, please feel free to private message me or text me or call. Don't forget to follow me on Facebook or Instagram at Dana Ortiz Homes. We are looking forward to our next video. We're going to keep this going. So if you have any suggestions, also write me and let me know. We'll try to cover that topic. But for now, I want to wish everybody a great weekend, and we'll see you next time. Bye, Brigitte.
Yeah. Bye, Hans. Talk to you soon.
Bye-bye.